Welcome to Al Stocks. In this video, we will use an intrinsic value analysis created by Warren Buffett's professor to find the actual value of the Clover Health stock. Evaluating a growth stock is challenging. However, it is possible with a few assumptions. Thus, I will use my DCF calculator, which stands for discounted cash flow, to show you what Clover should be trading at. Then, we will travel back in time in 2018 to evaluate the Tesla stock using only the numbers available during that time and the same assumptions used to evaluate Clover Health. As always, please do not like, subscribe, or hit any notification bell. Just listen, learn, and enjoy the video. Let's get started. Here you have 4 years of Clover Health's revenue from 2018 to 2021. Since 2021 is not over yet, we still do not know how much Clover Health will generate this year. However, the CFO in Clove's Q2 earnings report stated that they are on a revenue run rate to hit $1.6 billion. Thus, I will be conservative and use $1.4 billion of revenue in 2021. The challenge that arises when evaluating Clover Health is that they are currently not profitable with a negative free cash flow. However, when the SPAC became public in 2020, the company stated that they will become profitable by 2023. Therefore, the first assumption I will make is take 7% of the revenue in the past 3 years, which will become my projected estimated free cash flow. All the numbers that you see on this page will be inserted in our DCF calculator along with the total 253.1 million outstanding shares that Clover Health has. So all the numbers that you saw in the previous slide, we're going to take them, plug them, and chug them into my intrinsic value calculator. It doesn't matter where you put them on the free cash flow. It just takes the average. So I'm just going to plop this highlighted number in real lifetime, 19.4. 98. Okay. Now, to estimate a growth company's annual growth rate, you cannot use net income because it's negative. So I'm going to go ahead and use the revenue. So in 2018, they had $276.9 million. In 2021, the CFO estimated $1.6 billion. We're going to be conservative. We're going to say $1.4 billion. Again, these are in millions, which is why I'm putting 1,400. We have an estimated short-term growth rate of 72%. Now we're going to take this 10 years into the future and discount it back at a 10% discount rate using a 2% perpetuity growth rate model. Now I'm always very OCD in terms of the number of outstanding shares. I always like to triple check. So here we have 253.1 million. So as soon as we put this, it's going to spit out how much the Clover Health stock should be worth. And as you can see, it's worth $103. So you may be asking yourself a question, when will it hit this $103 mark? And to answer this question, we're going to go ahead and use the same assumptions, but travel back in time and pretend it's 2018, and we're going to evaluate Tesla. In 2018, Tesla was facing the same problem that clouds all growth stocks. They had a negative net income and a negative free cash flow. However, we will be using the same assumptions we made for Clover Health by taking 7% of the revenue of Tesla and projecting that as our estimated free cash flow. Please mind that the Tesla stock in 2018 was trading around $60. All the numbers that you see on this page will be inserted in our DCF calculator along with the total 853 million outstanding shares that Tesla had in 2018. Pretend it's 2018. We do not know what's going to happen in the future of Tesla. We don't know 2019, 2020 pandemic. We don't know nothing about that. So we're going to be doing the same thing. 7% of the revenue in my intrinsic value calculator stock. So again, doesn't matter what year you put it in, real time. Here, we're just going to take these highlighted numbers and plop them down right here. All right. So now that we have the average free cash flow, we're going to go ahead and take the revenue. We're just going to be using these years here, kind of a quick snapshot. 7 billion, and then 2018 it had this much. Okay, so that's a 75% growth rate extrapolated 10 years into the future and projected back at a 10% discount rate with a 2% perpetuity model. Again, I'm very anal when it comes to the number of shares. I always want to double check because that really affects the stock price. So back in 2018, they had 853 million shares. We're going to place that in here. And it says the stock should be $531.30. Now, mind you, at the time in 2018, the stock was trading at $60. Now, to answer the question, when is the Clover Health stock going to become $103. And maybe, if I made this video in 2018, you might ask yourself, well, when is Tesla going to be $531? It seems unrealistic, too good to be true. Well, if you look at Tesla and if you look at the net income in 2018, they had a negative here's the net income right here, right? They had a negative net income in 2018 and a negative net income in 2019. It wasn't until 2020 where Tesla finally had a positive net income. And if you look at the free cash flow, it wasn't until 2019 that they started having a free cash flow positive. They went from negative to positive, and then their free cash flow model grew. That's it. It was over. Everyone and their mama came into the stock. You can see here, as soon as that happened, then boom, the stock shot up. And then they published more data, and then boom, and then that's it. So that's exactly what's going to happen with Clover Health. You're going to have to wait until the stock actually starts to become free cash flow positive, and when the net income becomes positive. And the SPAC leader who created the stock said that they're going to be profitable by 2023. And I honestly believe 2022 and 2023 is going to be the golden years for Clover Health. And I think these investors are going to realize how these growth stocks work. And I believe that the growth rate of Tesla might be shortened in comparison to Clove, meaning that it's probably going to reach $103 faster than what we expect it to.